All right, so I put $8,200 into Dollar General stock earlier in the week, and this stock has gotten beat up for quite some time. Since 2023, it's been on a downtrend, and all I'm trying to do is capitalize on this opportunity, right? This isn't strictly Dollar General that's taking this hit, right? It's the entire retail industry. You look at Target, you look at Nike, you look at Lululemon, you look at Ulta, all these stores, these companies are taking a hit. Now, when I look at their top line, Dollar General, they're still growing their top line, right? They're still generating cash, which is very important. That's probably the most important metric that I look at is, are they cash flow positive? They're still generating cash. They also pay a nice dividend. So with an increase in initial capital, you're also going to get paid dividends for holding that stock. So they're still opening stores, they're still trying to grow, and all it is the stock price is going down. So investors start to get scared. So what I like to do is I like to buy companies that have proven business models, right? They already generate cash, and I'm just trying to buy it when it's undervalued, when a lot of people get afraid. And that's really the name of the game, is a lot of people, they'll buy the hot stocks in the market when they're near the top. And all I'm trying to do is buy the stocks that aren't necessarily hot at the time, but eventually will become hot.
So I wanted to make sure I got this video out by the end of the week, but going over the play that I'm in. So Dollar General, I started a position in this earlier in the week. Cost basis is at 81.50. So I put about like 8,200 into it. And I mean, this stock has gotten pretty beat up since the start of 2023. And I really like this entry point because, I mean, we're going back to last time it hit $78 at the bottom. The last time that it hit that was 2017. So it's going back to 2017 levels. And, you know, after going through their financials, right, they're still growing their top line, their revenue. They are net income positive, meaning that they are a profitable company. And they are cash flow positive, which is one of my probably the biggest, most important metric for me, is whether a company is generating cash. Now, they do pay a dividend as well. So it's up to about 3% right now. It might be a little lower than that at like 2.9. So you do get some dividend payments for investing in this as well, which is really nice. Especially if you are paying dividends, you want to always make sure that the company is cash flow positive, because if they're not cash flow positive and they're paying out to their shareholders, then that's not really a good look, right? So all that stuff is good. Now, I did make a post about them, and I did say that I don't like their margins slimming down. They're barely making profit because their margins have slimmed down, especially since this big drop-off of 2023, since 2023, right? But there's reasons for that. I was looking more into it, and hopefully they start to bump those margins back up so they can start making more cash, and which I think they will. But they still are opening a lot of stores, trying to keep up with growth and everything. So, but anyways, 81.50, nearing the bottom here. If you look at the daily chart, we were oversold around 78, 77 at that low. And we just got in a little bit later, which is okay, right? But looking at this weekly chart, we're oversold, back to oversold. So we were oversold a couple times back in 2023, where it bottomed out and then it's popped and then it popped again. So right now, we're oversold on the weekly again. So it looks like some buying is starting to come around here, right? We had some wicks showing back in September, which it did pop into like $88, fell back down, and we're starting to get some buying again, which is a good sign. We are oversold on the weekly, and then if we go to the monthly, we're oversold on the monthly, which is something that this stock has never seen before. And when a stock is oversold on the monthly, that is for me, a positive sign, right? Meaning that this thing could potentially bottom out in the near coming future, right? We're not trying to catch the absolute bottom of a stock. It is impossible to do that and know when the actual bottom is, but we can at least try to get the best entry possible. So last time this stock was oversold on the monthly was back in October, and then it started to run up, as you could see. It ran up about 64%. So it made a new low, so we can actually get an even better entry than that, around $81, which is nice. So we want to see some maybe sideways trading, potential bottom out here, kind of like similar to 2017, where it was kind of just trading sideways and then it started to run. So the risk to reward here, in my opinion, makes a lot of sense. So 81.50, this $70.30 is going to be my like get out. If we pass that and go to $70, then that is going to be my exit, where I just cut my losses and then move on to the next trade. So if you think about it, my price targets versus my stop loss, it has to make sense, right? Like, it's all about how much you're risking to get that reward. That's what it's all about, right? It has to make sense. So if I risk, let's say I put $8,200 into this, right? And my selling point is $70. That's my stop loss. Now, just quick math, it's going to be 7,000, but this is how you calculate this stuff. I have 100 shares, so it makes it easier. But you just do, right, 100 times, not 700, times 70. So that's 7,000. So I'd lose $1,200 on this trade. But when you go to the price targets, right, we can set out our price targets here. First one, I'd probably put 125. And then I'd like to see this get to like 145 and then 168, around there. So those are like my primary levels on where I would start to take profits for this trade. Now, to calculate that, same thing, 100 shares times that by, 125. That would give me 12,500, right? And then if you don't know that, you could just divide that by the position, how much you have. So I'd make $4,300 on this trade. So I'm risking $1,200 to make $4,300. That's not a bad risk to reward there, right? That's actually pretty good. Now, that's if I want to fully scale out at 125. I could just take some profits. So that trade right there, that would put me at about 50%. So yeah, I mean, that's a pretty good level to take some profits, and then I could just hold the rest and then take it to 145. Now, what would that look like, right? 100, 145, that's 14,000, right? So just take that difference. I'd make $6,300 on this trade. So that is how you do quick math on risk to reward and whether or not it's worth it. Now, if I was risking 1,200 to only make 2,000, then that risk to reward is not worth it. But overall, I think this play is going to look pretty good.